Hello everyone, I hope you're doing great. Welcome back. This is TikTok Clips, and since it's the first video of the year 2025, I just want to wish you all a happy new year. And without wasting your time, today I want to address something which some people have been asking me in my Instagram or and Telegram accounts, which are found in my YouTube channel description, and it's about liquidity flips or failed liquidity engineering. But I don't know if they are clear about liquidity engineering, but liquidity flips. Um, okay, so let me share the screen first. So I don't know if these people are clear about liquidity engineering because the liquidity flips come from the concept of liquidity engineering. But since this is a public channel, I understand that there are different people with different trading level, like beginners and intermediate and pro traders. So I will discuss the liquidity engineering concept before discussing liquidity flips. So why liquidity engineering? In the market, we have the so-called market makers or the market dealers. What they do is trying to hunt our stop loss because we are just retail traders in the market. So we are trading depending on how they trade. So we have to know where the market makers place their orders so as to make decision of the true market direction. The aim of the aim for us is to escape from the stop hunting. Therefore, that's why I used it to say that liquidity engineering is also called the um, a stop hunting. So let's let's see some examples of liquidity engineering first, before going to the liquidity flips. So, for example, let me annotate here. So, for example, we have this at the support level. Example for an uptrend, the market creating a high highs, higher lows, high highs, higher lows, high highs, higher lows, high highs. So since this is a support, I mean it's a resistance level, a lot of people, the knowledge is already public that we sell on the resistance level and buy on the support level. So a lot of people will place their sell orders here and their stop loss above their sell orders. So when the price come to this area, they will enjoy maybe a short-term profit, but the market will stop them out. And also there is already a knowledge that say the broken resistance become a support, means to say that some people will place their buying orders here and the stop loss below this point. So the market, when making a correction movement, they expect to buy here and move to the upside, to the upside, but they are being stopped and the market move to its true direction. So according to sentiment analysis, this area here, um, there are a lot of participants that have been stopped out. Why? Because the market makers hunted their stop loss, their orders, so they get lost. For the case of, I mean, um, for the case of downtrend, maybe we have the support level here. Sorry for my drawings. We have the support level here, and the market creating lower highs and lower lows, and lower highs and lower lows. So also we have the knowledge of buying the support area. So people will buy this area, this support area. Some people will place their orders and the stop loss here, but they enjoy short-term profit and being stopped out before the market. Also, the market, also people have the knowledge of the broken support become resistance. So they place their orders here and their stop loss above the sales orders. So they will be also being stopped by the market, and the market came back and moved to its true direction. So this is what we call stop hunting and or liquidity engineering. So for the case of liquidity flips or failed liquidity engineering, simply liquidity flips refers to the liquidity engineering that has been stopped out. The liquidity engineering that has been stopped out. And we have three types of liquidity flips or failed liquidity engineering, but here I'm going to explain only one type of liquidity engineering, which is normal liquidity engineering or normal liquidity flips. So simply to say, the failed liquidity engineering or the liquidity flips, since we say it's a liquidity engineering that has been stopped out, meaning to say that this is liquidity engineering, as we say. So the stopped out of liquidity engineering is the price to break this level here. The market has to push down and move to the upside. And also for the case of the downtrend also. So when the market dropped down, the price, when the price broke down here, the market will come back to this level and push to the downside. So I categorize into two types of normal liquidity flips: the powerful normal liquidity flips and also the mid powerful normal liquidity flips. But all of them are working very perfect. But the difference is the powerful liquidity flips, they involve several touches or several reactions. The price have to react several times before engineered or after engineered liquidity. So I'm going to show you some examples which I found in my trading journal. So the first example is, okay, sorry. So the first example is, let me clear first. Let me clear this area. Let me clear this area here. So here, the first example, as you can see, when I'm talking about several touches or multiple reaction, I mean this, when you extend your line, as you can see, we have first touch, second touch, the market engineered and failed to engineer by the high momentum candle or impassive candle. And our stop loss is below the body of the broken candle. So as you can see, the market pushed down and then came back and pushed to the upside. And this was Australian JPY on the daily perspective. So the second example is, so let's see the second example. So it's a Bitcoin. So as you can see, we have several touches. When you extend the line here, we have first touch, second touch, then market come to engineer liquidity here. The broken down by the price was broken by the impassive candle. Then the price came back into our entry here and push to the downside, as you can see. Okay, so we have another example. Carry JPY, as you can see, also the same thing. Let me show you for the example of Bitcoin. So on the Bitcoin here, we had two types of liquidity flips. We had a mid powerful liquidity flips and the powerful normal liquidity flips. So for example, someone might ask you, why I didn't take this as my entry? Because this is a mid liquidity flips. That means I have already powerful liquidity flips which involve the multiple rejection here, multiple reaction. So you can take this area, but the risk will be much higher compared to this level. That's why we used to to use the powerful liquidity flips rather than the mini liquidity flips. So another example is from Canadian dollar based on 1 hour perspective. As you can see, the same thing. Another example is this one. We see there is multiple reaction. First reaction, then the market come to engineer liquidity here, and then price was broken by the high passive candle. Market came back and pushed the price to the downside. So as you can see, so another example is this example from Canadian JPY based on 1 hour time frame. Also, someone might ask that why there is no passive candle. Maybe is just trying to find the single candle. But mind you, if there is a series of momentum candles like this one, because this is then this is 1 hour time frame, which means that every single candle here represents 1 hour. So on the 4 hour time frame, you might see one single candle. So with the price and the price engineer liquidity here, then broken down, then the price came back and pushed the price to the downside, as you can see. Okay, we have another example, which is Euro JPY. The same thing, as you can see, we have multiple reaction of the price before engineering liquidity, and the price was broken by the high momentum candle or in passive candle, and the market came down and take our entry and push to the downside. Also, another example is British JPY. Also, as you can see by yourself, another example is there are a lot of examples, and these examples are currently. I took this entry very currently, and as you can see here, this is US30. I took this entry from here based on Fed liquidity engineering, which was a powerful liquidity flips. Powerful liquidity flips. So we have this reaction here. The price came and broken by this impassive candle. I took my entry right here. And also another example is USD SHF. As you can see by yourself, we took our entry from here, our stop loss. On the other end, the market push to the downside. We have USD JPY based on daily time frame. Also USD JPY based on 1 hour time frame. And examples there are a lot of examples. I try to show you so that you can understand better. And also the last example is XRP USD. As you can see, also we have multiple reaction. Because this is our stop loss hunting or liquidity engineering, but you have this multiple reaction here and here, then the price come and broken by this momentum candle, then come to took our entry here, our stop loss was there, so the market came and pushed to the upside. So as you can see, so another example, okay, this was the last example based on the powerful liquidity flips, but also we have the mid powerful liquidity flips. So this mid powerful liquidity flips, it differentiates from the powerful liquidity flips. This doesn't involve the several touches, so multiple reaction of the price. But mind you, that it's not means that they don't work. They work very perfectly because the powerful bullish setups are the fairly bearish setups and vice versa. So let's come to see the examples of liquidity, mid powerful liquidity flips or mid fairly engineered liquidity. So for example, here we have Australian, Canadian. So as you see, there is no multiple reaction of the price here. Even if you extend your line here, you won't see the multiple reactions. So it's only a single reaction from here. The market came, and then the price came and broken by this impassive candle. Then the price came to take your entries and push to the downside. So as you can see, so another example, let's see another example. Another example is Euro JPY. So as you can see here, also we now have several reaction or multiple reaction of the price. Another example is sorry, this one from the GBP JPY based on 30 minutes time frame perspective, and also this one, this is in the DUSD. We have the mid powerful liquidity flips, as you can see. Also, we have this another example from the DUSD based on 5 minutes perspective. Also, that's the end of the discussion. So thank you for listening. I hope you learned something. So don't forget to subscribe at TikTok Pips, like, comment, and share with your friends. I'm out. Bye bye.